Is it boom or bust for the Australian property market? In this video, I'm going to run you through all the outcomes that could happen from here on in.
The next federal election is shaping up as a contest over migration and population growth. Both sides of politics claim to have the solution to the spiralling cost of rents and houses.
The housing market problem is now front and centre as the biggest issue Australia faces, and with a federal election due in mid-2025, one can only feel that we're about to go through a pivotal stage in the nation's history. Does the housing market continue its multi-decade trend, or will the new parliament pivot on the pro-housing policy and steer the ship back in the direction that works for the average Australian? The great Australian dream of owning your own home is something that is a part of who we are as a nation. Post-World War II, Australia was booming. We needed more people, so we embarked on what at the time was a mass immigration program. It seems we haven't changed much here. The deal was, if you were British, we would let you get on a boat for just £10 and come to here to be an Australian. Back home, most of these people couldn't buy a house, yet they packed their bags and they travelled to the other side of the planet, and guess what? Home ownership was now a reality. They called this cohort the £10 Poms, and it's where the great Australian dream really started. It's a stark contrast to present times. Clearly things have changed, and it's leading people to believing that home ownership is a thing they'll never be able to achieve in their lifetime. What was once a rite of passage is now cut off to a growing amount of Australians, and the outrage and disappointment that's coming with this is also growing by the week. So in this video, we're going to get into what I believe the potential scenarios are for the Australian property market going forward. We're going to look at three possible outcomes, and that is A, things continue and the housing market goes up to unspeakable highs. B, the housing market is a Ponzi, and like all Ponzi schemes, they crash and burn. And C, something much more concerning, which no one's really talking about. I'm going to drill down in more detail in these three outcomes later on, but before we get there, I've got to take you through how we got in this whole mess in the first place. My name is wbell, and I've run my own mortgage brokerage down here in Melbourne for the last 13 years, and in that time, I've watched the Australian property market evolve into what we see today. The reason I'm in business is to help people make it financially, and let's face it, that's becoming harder and harder for Australians to achieve. The reason I do these videos is to try and show people different perspectives in the real hope that it adds some sort of value. My favourite saying about these times we're living in is the only thing that's certain is uncertainty. None of what I say is financial advice. Let's go to the 80s and 90s. Yes, that time we were into big hair, bold fashion, and happy pants. This time is really important in the forming of Australia. Social justice took off in the 80s. It's really where Indigenous rights, environmentalism, and women's rights really started gaining attention, and it's here that has significance to the property market. In the 1980s, the traditional family was a husband and wife with 2 or more kids. Prior to that, the wife was the homemaker, sometimes just till the kids were old enough to walk themselves to school, and sometimes they were a full-time homemaker, meaning they weren't employed. Everything changes, and the 80s marked the decade where women started coming into the workforce, and that trend has continued since. What that meant was that household incomes went up. More families could now afford Nintendos and Segas, branded clothing, and spending money on health and fitness. It also meant they had more borrowing power. This graph's a bit complicated because it's got other countries here, but Australia is the red line. It is a ratio of house prices versus income. The increase from when the graph begins in 1984 till around 1993, when the recession we had to have, shows despite rising interest rates and additional incomes from more women entering the workforce, we still borrowed more. From there, that line keeps going up. There's a couple of different ways you can look at this. Firstly, the increased incomes allowed Australians a better standard of living. Or secondly, contrastingly, families work harder to be in debt for longer. Negative gearing has also been around for a long time. It actually dates back to the Income Tax Assessment Act of 1936, believe it or not. The reason the 80s are pivotal to negative gearing is because for a brief period of time, the Hawke government actually removed it. It was removed to curb speculative investment and ease housing affordability. It resulted in rising rents and a loss of investor confidence. In 1987, they reinstated negative gearing in response to rising rents and the political backlash that came with it. It was also seen as a step to encourage more housing investments. To this day, negative gearing has remained a contentious issue for the same reasons it was originally removed for. Right now, the Greens want to scrap negative gearing and are holding up Labor's proposed housing policies to solve the housing crisis. I'd like to hear your thoughts about negative gearing in the comments below. I have my opinions on it, however, I can see both sides of this argument. One thing is certain, and that is from around this time, property is seen as the preferred asset for investment for Australians. More women in the workforce and negative gearing are an important part of this story. But there's one more piece to this time frame that is really important, and that is the deregulation of banking. It's 1983 and our government has decided it's time to open Australia up to the world, and they would start by floating the Australian dollar. Prior to this, the value of the dollar was always pegged to other currencies such as the British pound or the US dollar. This change in the money system allowed us to have more control over our own destiny. It allowed the RBA to set its own policy on interest rates. It also allowed foreign money and competition into our market. This is important because the banking industry was pretty stale and large parts of it was owned by the public. Opening up our financial system to the rest of the world meant that banks had to start competing and selling the products, including home loans. Here's a graph of bank credit as a percentage of GDP, and you can see that from pretty much that time frame, what has happened to lending, and these days most of it's for home loans. Fast forward to the year 2000 and we've now morphed into this first world country. From this time frame, there are three things that really shape the current state of the Australian housing market. Firstly, we started ramping up government schemes. The first homeowners grant was introduced as a sweetener for the state governments to get on board with reforming the tax system and the introduction of the GST. Since then, the first homeowner incentives have multiplied to a whole portfolio of schemes, incentives and grants, which has pushed more demand into the property market. The reason they have multiplied is simple. No governments want to shut out a major part of the voting population, and higher house prices keep property owners happy at the same time. This is a trend that's likely to continue in the new raft of proposed policies. More on that later on. The tax reforms also led to a discount in the capital gains tax for assets owned for over 12 months. It was introduced to be in line with global trends and keep investment in Australia. And this is the argument for scrapping it. The country doesn't need these assets held by investors. The market needs supply, and giving investors incentives not to sell doesn't help that. Regardless, this is still the system we have right now. In this period of time, Australia witnessed an acceleration in immigration. Seemingly, the nation had to double its immigration intake from the long-term average. This provided more skilled workers and increased demand into our economy. But it's not all benefits. The nation needs to provide infrastructure, services, and housing for a growing population. The global financial crisis was a global banking meltdown. Putting it in layman's terms, banks created value where there was none. Dodgy loans to people that couldn't afford them, ninja, no income, no job applications. These loans are assets to the bank because they're making money for them. Then banks would sell these assets to other financial institutions. So anyway, they were selling these dodgy assets to each other and taking out insurance on their dodgy assets to protect themselves from the loans not being paid back, which was always bound to happen. Well, the dodgy assets or loans fell over because people couldn't afford them, and then the insurance policies that the banks took out to protect themselves from this couldn't actually afford to pay them out as well. Whilst these ninja loans weren't really happening here to the extent of the US, it was our banks that were exposed, and the fear was the global banking system would just seize up and money would not circulate. So the Australian government took action. In 2008, $10.4 billion was announced to get cash into the hands of the people that need it the most. 4 months later, a further $42 billion was announced, which was spent on things like schools and infrastructure projects and energy efficient housing initiatives. Everyone remembers the disastrous Pink Bats program. The truth is, for most Australians, this was a blip on the radar. The important thing out of this whole period was the rampant stimulus or money printing that the nation embarked on. That $52.4 billion was a lot of money back then, and it's this money printing precedent which takes us to more modern times.
China has identified the cause of the
mysterious new virus.
Coronavirus.
There are fears a rapidly spreading virus has reached Australia.
It's early 2020 and calamity strikes. We all know what happens next. In terms of fiscal stimulus, there was JobKeeper payments. Remember the $1,500 per fortnight? Casual workers earning less than that on a normal fortnight were actually raking it in because they were getting the $1,500. They increased job seeker payments. Who can forget Aussies accessing their super, $20,000 worth? There was support for businesses that were basically throwing money at small and big business. Let me remind you of Harvey Norman taking millions of dollars and putting it straight into their coffers. In terms of money policy, interest rates were dropped to 0.1% at the RBA. There was also something called the Term Funding Facility, which allowed banks to lend money on the cheap. Everyone remembers 1.89 home loan rates. What's important here is the precedent of the government stimulus spending again. The lockdowns also threw global supply chains out of whack, and that really hurt the Australian consumer because a lot of goods were imported. It also really hurt developers and builders who had signed contracts pre-pandemic and then had to deal with skyrocketing costs. This pushed a lot of these guys out of the industry. Probably one of the larger news items in this time has been that of immigration, and despite the federal government acknowledging the issue and promising to get it down, it looks like we're still going to have high immigration for this year. You can take a lot of angles on this issue, however, it's hard to argue that increasing the amount of people whilst not increasing the amount of property supply is contributing to the housing shortage that the nation is facing. And that brings us to today. Inflation has just recently hit back within the target range. Whilst it may feel as if everything is still going up and not stopping, it appears that higher interest rates are doing what has been intended and drop the inflation rate back within the target range of 2 to 3%. Despite calls of interest rates needing to come down, the RBA has been really conservative here. Earlier in the year, we had financial institutions predicting interest rate decreases from as early as June, and yet they're still not here. The RBA fear inflation, and that's fair enough because that's part of their job. Firstly, what we're earning as individuals is now increasing faster than the inflation rate. That means individuals have a higher capacity to spend more. Secondly, unemployment is still very low historically at 4.1% at the time of this recording. You can see here in this graph that whilst the private sector is really weak at the moment, the public sector is stepping up and creating all the employment. I was going to spend a bit of time on the upcoming federal election and the proposed housing policies for both parties. The truth is I don't have the time to create such a long video. This is something I'll look into more closer to the election and post some content on then. The conclusion I've come to, however, and take this with a grain of salt, is that both parties will continue to implement policies that support the property market. It's been happening consistently since the inception of the first homeowner grant back in the year 2000, so it's highly likely to continue again. Where to from here? This is where we come to a few basic scenarios. It's worth noting that the future is unknown. I realise that is a dumb statement, but media is full of people knowing the future, so don't take any of this as truth-telling or financial advice or anything like that. I'm going to talk about the two basic scenarios that come up, plus a third one I think has an increased chance of happening, which no one's really talking about. The first one is the housing market continues to do what it has always done for the last few decades. There are some really strong arguments for property to keep going up, and here they are. The money system is inflationary, and that's why property goes up over long periods of time. Interest rates have risen sharply over the past couple of years, but that still hasn't put any hurt on the property market. Think what you want about immigration. The reality is that no government's going to put net immigration down to zero. This means more demand in the market. Builders can't build any more properties any faster, yet we have more people coming in. Governments support high house prices with policies such as negative gearing and first home buyer grants, and they're promising more support. Personally, I think this scenario has a real chance of just continuing and keeping on happening. The polar opposite scenario is that the Ponzi scheme collapses. Here are some arguments for the collapse. Debt burdens are so high. Household debt to income ratios have gone to the point where people are going to be in debt till they retire. People are just holding on as it is, and in places like Sydney and Melbourne, we can see more properties coming onto the market as many homeowners are beginning to realise interest rates are now higher for longer. Last year I put out a video about the property market and my thoughts were a boom was coming followed by an almighty crash. I haven't really changed that much on the boom part. I still think that's a real reality, but I have changed the crash part. There are several reasons for this, but I look at the investment market. Rents aren't going down anytime soon because of the supply issues. If the property market decreases by any meaningful amount, interest rates will be dropped and potential homeowners and investors will have increased borrowing power to buy out properties. It's worth noting the definition of a crash is 20%. If you had owned a property for the last 10 years, which takes up a large proportion of all the properties, then 20% wouldn't scare you that much if your property went up 100% already. Stagflation of the nation. After years of decreasing inflation, there were genuine fears of our economy slipping as the national inflation fell below the target range of 2 to 3%. Ultimately, we got inflation and experienced the downsides we're still feeling right now. Right now, it feels like there's a lot of negative sentiment going around. It's easy to think that everything's going to implode. There is another outcome in play, stagflation. It's when there's a stagnant economy and high inflation at the same time. You could argue we're not there yet. On the other hand, you could say we may not be very far away. You could argue economic growth is stagnant, as recently real incomes were going backwards in the face of cost of living inflation, meaning inflation was going up way faster than incomes. Higher unemployment, whilst it's going up, it's still at record lows. At the moment, the public sector is paying for all the job creation, which long term should be clear that will lead to bad outcomes. I mean, if enough people become employed by the public, it's easy to see that an economy could become stagnant. The truth is, right now, everyone's got work and no one's fearing being without work. We simply aren't there yet. High inflation, well, that one isn't off the table either. This is a game where central banks are trapped between a rock and a hard place. They can't really reduce interest rates because it may trigger inflation again. At the same time, governments could keep on spending, which is basically working against what the central bank is trying to do. If you have a home loan and you just want to repay it as soon as possible, I'm launching a program just for that called Debt Destroyer. You can seek your interest early by contacting via the link in the description. To sum up this scenario, too much money is borrowed or created in the system. As a result, there is not enough economic output for the borrowed money, meaning the debts have become harder to repay. At the same time, there are now increased risks, which result in higher interest rates. We aren't there yet, however, I think this is a possibility of happening. I think the real question here is, does this monster of a property market still have room for another run? This topic is really deep. It affects everyone in different ways. In this video, I've really tried to rely on data, but the fact is, at an individual level, our housing market is creating a lot of pain for everyday Australians. It was mid-2022 and I had just turned 40. There was probably some reflecting going on. We'd just gotten out of the COVID lockdowns era and everything was supposed to have gone back to normal. I came to something in my thoughts, and I've said it in many times in videos since. I said it earlier in this video, the only thing that's certain is uncertainty. I really hope you got something from this video. However, I would urge you to look back at the last 5 years and take a look at all the wacky things that have happened and just take that into account when making important decisions. That's all for me. If you like this video, give us a comment and a subscribe if you haven't already. Cheers.